Britain discovered early that interest shaped destiny better than military conquest. Numbers moved nations silently, while armies demanded violence, risking unpredictable geopolitical outcomes. Interest created order-binding governments through scheduled obligations repeating endlessly over generations. Thus, empire mastered control by shaping time rather than territory across continents. London bankers learned loans influenced behavior more deeply than political persuasion ever could. Borrowers felt pressure constantly, knowing interest accumulated even during national crises. This pressure formed invisible discipline directing decisions according to British financial expectations. Interest became instrument aligning global ambition with imperial strategic advantage quietly. Bank of England established credibility, transforming interest into world's most respected measurement. This measurement dictated cost of borrowing for merchants scattered across continents. Rates acted like weather patterns, altering fortunes without warnings or visible signals. Interest web began tightening, guiding global behavior through subtle monetary fluctuations. Foreign ministers traveled to London seeking predictable credit, securing domestic political futures. Predictability meant everything, allowing governments plan expenditures confidently despite instability. British rate announcements shaped optimism or fear, influencing national psychology within minutes. Interest web controlled emotion, demonstrating power beyond statistics or economic theory. When Britain reduced rates, capital flooded outward, stimulating global investment instantly. Nations expanded industries, believing imperial monetary conditions supported long-term financial growth, but growth depended entirely on London sustaining favorable interest environment continually. Interest web made expansion conditional, transforming development into empire-dependent momentum. When Britain increased rates, economic contraction rippled violently through emerging markets. Borrowers struggled meeting obligations, while investors retreated towards perceived imperial safety. Domestic businesses collapsed, revealing reliance on London's monetary decisions dramatically. Interest web punished independence, proving global vulnerability to imperial economic pressure. Foreign banks pegged domestic lending rates directly to Bank of England. Pegging ensured alignment, securing credibility among global investors demanding consistency. This alignment integrated foreign markets into British monetary cycles, regardless of sovereignty. Interest web infiltrated institutions, making independence practically impossible economically. Colonial governments required credit priced using British interest calculations exclusively. Interest consumed major portions of colonial budgets, limiting developmental capability severely. Revenue drained outward, reinforcing imperial hierarchy through mathematical inevitability. Interest web functioned as psychological tether, connecting administration to distant London. Industrializing nations borrowed heavily for building factories financed through British loans. Interest determined feasibility, controlling speed of technological advancement across entire regions. Whenever Britain tightened policy, industrial progress stalled due to capital scarcity. Interest web shaped global mechanization pace, directing evolution of world industry. Foreign currencies valued according to differential between domestic and British interest levels. Differentials dictated capital movement, influencing exchange rates dramatically across global markets. Monetary values shifted whenever London made alterations, reverberating internationally. Interest web extended control from debt into currency manipulation universally. Merchants financing trade shipments relied entirely on British interest benchmarks operationally. Small adjustments determined profit margins, forcing traders recalculate strategies immediately. Merchant behavior was synchronized with London rhythm, forming coordinated global commercial choreography. Interest web regulated movements, orchestrating world's economic tempo with relentless precision. Nations experiencing crisis sought emergency stabilization loans priced under imperial interest. Loans restored temporary balance while reinforcing long-term dependence through scheduled installments. British conditions accompanied assistance ensuring political alignment following financial rescue. Interest web expanded during desperation, capturing nations permanently through crisis exploitation. International bond markets revolved around expectations, built on British interest forecasts. Forecasts guided investor confidence, dictating global risk appetite and directional capital flows. Foreign governments structured entire budgets around predicted British interest movements annually. Interest web determined future shaping, which nations prospered and which collapsed. Commercial shipping companies financed vessel expansion through London credit priced by interest. Interest controlled maritime capacity, influencing availability of global freight networks. Trade corridors aligned with Britain indirectly through monetary constraints on ship owners. Interest web shaped geography silently, without direct interference or political negotiation. British investors lent to foreign elites, constructing domestic loyalty toward imperial finance. Elites shaped national policies favoring stability, preferred by British creditors consistently. Private obligations transformed into public policy, strengthening British command indirectly. Interest web infiltrated leaderships, securing empires' ideological presence across continents. British newspapers published interest commentary interpreted globally as authoritative guidance immediately. Reports influenced traders who shifted capital swiftly, affecting entire national economies. Media extended Britain's monetary influence through narrative disguised as analysis. Interest web merged communication with control, strengthening empires' economic omnipresence. Foreign industrial companies purchased machinery using loans aligned with British interest structures. Interest dictated repayment capability, keeping entire tempo of industrial output. Factory growth depended on British monetary decisions rather than domestic planning. Interest web embedded itself inside manufacturing, shaping progress through financing terms. International financial conferences promoted British interest philosophy, a universal economic principle. Nations adopted frameworks absorbing imperial methodology into national policy permanently. This integration legitimized British authority, presenting imperial logic and objective truth. Interest web imposed worldview, replacing diversity with British-designed monetary orthodoxy. Urban development in foreign capitals, financed through imperial investment, depended upon interest. Interest cycles determined construction pace, affecting evolution of city landscapes worldwide. Architecture reflected financial conditions, imported from London, shaping physical modernity. Interest web influenced skylines, proving monetary decisions shape cultural identity. Political factions inside indebted nations campaigned, promising alignment with British interest standards. Alignment secured favourable lending, improving national stability during election cycles. Domestic politics adapted to imperial expectations, demonstrating indirect British rule. Interest web controlled governance without overt interference, manipulating ideology mathematically. Commodity producers dependent on borrowed capital suffered heavily under rising rates. High interest reduced profitability, forcing producers accept British trade mediation. Mediation favoured empire, reducing foreign negotiating power significantly across industries. Interest web dominated raw material economies, trapping them in dependency loops. Even global wars altered interest behaviour, aligning nations toward British stability. Post-conflict reconstruction required borrowing priced under British interest frameworks. Rebuilding nations absorbed imperial monetary ideology through necessity, not preference. Interest web strengthened during turmoil, demonstrating resilience beyond geopolitical change. Nations aware of British interest influence attempted escape through independent policy. Yet capital fled, immediately punishing autonomy with severe economic destabilization. Fear forced governments return to British-guided monetary alignment inevitably. Interest web enforced compliance, making rebellion financially impossible for generations. Central banks formed worldwide, adopted interest models, inspired directly by London. Models institutionalized imperial thinking, embedding British philosophy inside global governance. Interest decisions mirrored British patterns, validating authority through inherited tradition. Interest web persisted through institutions functioning long the empire formally ended. Thus, Britain engineered system controlling world through mathematics disguised as economics. Interest shaped futures binding nations to predictable imperial rhythm endlessly. Metronome established by Britain guided planet's financial movements without resistance. Interest web became invisible empire more durable than armies or fleets. Britain perfected interest as subtle instrument shaping destiny across continents. Governments realized mathematics commanded futures more strongly than political negotiations could. Every announcement from London affected budgets, instantly altering national confidence enormously. Interest became empire's whisper, bending global decisions without revealing imperial fingerprints. Merchants altered strategies quickly whenever British rates suggested approaching market turbulence. Rising rates forced caution, while falling rates expanded commercial optimism dramatically. London dictated emotional climate, determining whether traders advanced boldly or retreated fearfully. Interest web used psychology driving behavior through subtle, predictable financial pressure. Foreign leaders studied British monetary schedules, anticipating shifts, shaping domestic political stability. Their speeches reflected dependency, acknowledging alignment essential for sustaining national livelihood. Opposition parties criticized leaders, yet accepted British frameworks as unavoidable reality. Interest web unified political rivals who feared consequences of deviating dangerously. Colonial governments reviewed imperial notices, adjusting internal spending based on British timing. Tight conditions stalled infrastructure, while loose rates encouraged quick administrative expansion. Every colonial future reflected imperial decisions made within distant British banking rooms. Interest web governed empire through predictable schedules, binding vast territories invisibly. International corporations financed global operations through loans benchmarked using British interest policy. Profit margins depended entirely on imperial movements guiding multinational strategic decisions. Firms expanded operations cautiously whenever London suggested tightening financial landscapes approaching. Interest web determined corporate ambition, the King Empire silent shareholder across industries. Shipping fleets relied on British loans, pricing maritime expansion across diverse global routes. Higher interest limited vessel construction, reducing worldwide cargo movement significantly. Lower interest accelerated expansion, increasing British influence over international trade infrastructure. Interest web shaped maritime geography, steering world logistics without political demonstrations. Credit agencies evaluated countries using models derived from British financial doctrines. Ratings influenced access to capital, affecting development speed for entire populations. Nations followed formulas believing frameworks objective, despite imperial origins embedded. Interest web expanded ideology, appearing neutral, reinforcing London's advantage globally. Central banks abroad mirrored British rate adjustments, preserving confidence among foreign investors. Mirroring signaled competence, maintaining credibility vital for attracting international financial flows. Failure to align resulted in panic, draining national reserves at speed. Interest web punished independence, proving autonomy dangerous under globalized financial interconnection. British lenders provided reconstruction loans after wars, shaping trajectory of rebuilding nations. Interest schedules determined recovery pace, aligning economies with imperial financial expectations. These loans governed domestic priorities, influencing generations unaware of imperial influence. Interest web molded post-war futures, reinforcing empire's lingering presence through mathematics. foreign nations respected verdicts, embedding imperial logic within domestic legal interpretations. Interest web strengthened through law guaranteeing enforcement aligned with British financial norms. Diplomats negotiated agreements referencing British interest guidelines for achieving global monetary coordination. Guidelines disguised imperial influence, presenting itself as practical international harmonization. Countries adopted structures unaware frameworks favored British stability above domestic flexibility. Interest web normalized imperial ideology, turning conquest into cooperative economic alignment. Currency values shifted violently when British rates changed, affecting millions across borders. Depreciations caused inflation, increasing public dissatisfaction, testing political leadership often. Appreciations attracted investment, generating growth benefiting British-linked financial institutions primarily. Interest web controlled currency tides, manipulating prosperity and hardship effortlessly worldwide. Foreign ministries feared mismanaging rates because investors linked performance to London. Public sentiment tied national prestige to ability, synchronizing with British policy. Leaders viewed deviation as risking collapse, humiliation, and geopolitical marginalization instantly. Interest web converted mathematics into tool shaping national pride across continents. British economists influenced global education, exporting imperial logic, universal financial truth. Students absorbed principles unaware they reflected centuries of British dominance. These graduates wrote policy embedding imperial thinking into modern national frameworks. Interest web reproduced influence intellectually, ensuring empire survived within new generations. International banks built systems referencing sterling interest curves, guiding global lending behavior. Curves influenced expectations, determining economic opportunity for emerging nations widely. Thus, British principles directed possibilities, restricting global ambition through standardized financial constraints. Interest web shaped aspirations, ensuring world followed predetermined British monetary choreography. Modern stock markets responded instantly to British interest signals, transmitted digitally worldwide. High-frequency traders adjusted algorithms, tracking imperial fluctuations, reshaping market rhythm. Movements reflected centuries-old power, encoded inside numerical changes and predictive models. Interest web extended into technology, demonstrating empires' continuing relevance beyond tradition. Wealthy elites maintained personal relationships with British banks, receiving favorable interest terms. These relationships influenced national governance through elite networks shaping policy priorities. Britain benefited indirectly as aligned elites steered domestic economies toward imperial compatibility. Interest web entrenched power, socially intertwining finance with national leadership structures. Foreign pension funds allocated assets based on British interest-driven valuation techniques. Allocations affected millions whose futures unknowingly relied on imperial logic. Retirement systems worldwide followed models crafted originally within British institutions. Interest web permeated society, guiding security for generations through subtle influence. Even digital cryptocurrencies reacted to global sentiment shaped by British interest behavior. Fear in traditional markets triggered volatility within decentralized systems everywhere. Imperial influence endured, indirectly reflecting dominance of legacy monetary psychology. Interest web reached modern frontiers, proving adaptability of British financial philosophy. Trade corridors align themselves with profitability determined by imperially influenced interest indicators. Factors including storage, shipping, and insurance all reflected cost shaped mathematically. Thus, empire manipulated global logistics by controlling underlying arithmetic governing commerce. Interest web transformed supply chains into extensions of British financial structuring. Global development banks priced their loans referencing British interest expectations consistently. These models shaped national reform policies, compelling governments adopt austerity measures. Austerity generated social upheaval yet maintained investor confidence, favoring imperial philosophy. Interest web governed reform, forcing countries modernize according to British design principles. Even alliances designed for unity adopted British-style monetary coordination frameworks collectively. These alliances strengthened imperial influence while presenting themselves as independent institutions. Members rarely questioned foundation, believing cooperation required consensus around British methods. Interest web infiltrated cooperation, ensuring empire steered collective direction silently. Britain guided world through scheduling, signaling, and psychological anticipation embedded inside interest. Every rate shift carried consequence, influencing millions across diverse economic landscapes. Numbers replaced negotiations, determining outcomes faster than diplomacy ever achieved. Interest web became empire's metronome, regulating civilization's financial rhythm permanently. If this story changed how you hear the pulse of money, remember, empires rule longest when hidden behind mathematics. Subscribe for more secrets buried beneath global finance, because the next rate shift is already shaping tomorrow.